Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is Tuesday, January 17th, another short week this week. Hope those of you had a 3-day week and enjoyed yourselves. We'll jump right into it. We have basically just one economic news release scheduled for today, and that's actually the Empire State Index with January's numbers. And this is basically manufacturing that was in the New York region. And back in December, they had an 8.2. They're forecasting a little bit of increase up to 11.3, and it looks like they increased a little bit beyond that. So that's actually pretty good news that manufacturing reached it. It's actually the highest since last April, so those are decent numbers there. So we'll jump over to the headline news here. And what we see here is the stock market's up quite a bit. The Dow's up over 100 this morning so far. A lot of it has to do with Spain's auction going well, meaning that their costs are in containment. So right now, it's not a concern for any bailout. As if you've been following me, usually we say if their costs are 7% or higher, they just can't sustain that. And obviously, it's lower than 7%. So it's in an area range where they can sell their debt and be able to maintain those costs and keep things afloat here. Greece is still a bit of a concern as they have a stalemate with their creditors as to how they're going to reduce the principal that is owed to them to make the bailout work for them, because they have to have that in agreement before the IMF and EFSF lends them any more money, and right now they're at a stalemate with that. So, and that's coming up in actually March, so that needs to be taken care of. So as we kind of progress towards March, you may see that more come into headlines. But as of right now, it's not as big. They're kind of a little bit looking at Spain's auction going well, and probably hoping that Greece is kind of on the back burner, but they're still kind of with a slight eye looking towards it. So we'll take a look here, see how the interest rates are affected with the bond market. As we left last Friday, we had a big, huge uptick, about 30 basis points from Thursday's numbers. So we're still in that same range. We're at zero. We're basically same where we left off on Friday. We had obviously a dip in negative and at 3, so it kind of has a start effect. Remember, anytime we usually have a big opening gap, usually that gap will be closed. So in this case, I won't be surprised to see a drop at some point. So right now, interest rates are the same as Friday, but I will not be surprised to see if that closes maybe today, because the stock market's up quite a bit and there's some decent news today. And usually that bodes better for economics. They'll take money out of the bond market and put it into the equities market. So that could be a case. We do got some more important news this week with the inflation. We got the PPI report coming out, and what's on the wholesale inflation, we have consumer price index coming out, so the consumer inflationary numbers. We do have Philadelphia manufacturing coming out. So all those will be later this week, usually right around Thursday, Friday. We'll see more of those reports. But right now, I won't be surprised if this comes down to close the gap and then before it works its way up again, or perhaps goes down depending on the economic news scheduled later today. So a lot of variables that can play into effect here. All right, so interest rates are the same as what we left off on Friday. You guys have a wonderful day. If you guys are on my site, go ahead and please subscribe.